Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock, with news markets are pricing an expanding economy differently now. Firstly, the equity market rout may not be over. The S&P 500 was down another 1.5% on Saturday, and taking the drop in the past week to a massive 8.1%. But then things changed, with Wall Street ending up on the day. It is a calm that may last until Thursday, when the US reports its January CPI data. A high figure could reignite the sell-off that started a week ago. Markets are expecting a 1.9% increase or a 1.7% excluding food and energy. All this comes after Shanghai dropped 4% on Friday for a 10.2% collapse over the week. Opening today will be tame compared with the volatility we saw last week, and the IMF sees last week's market corrections as necessary. A US government shutdown has been averted with a new 2-year deal that will keep the federal government open and funded, but the compromises involved are toxic. Watch out this week for the US administration's 2018 budget. Is it expected to assume high sustained levels of growth and low sustained costs of debt? Markets may not look kindly on its assumptions. And US wholesale trade data on Saturday was surprisingly strong for December. While growth wasn't as high as in November, it handily beat estimates. And we should also note that 2018 has started out with record orders for heavy trucks in the US. And north of the border, Canada has reported disappointing employment numbers. The number of jobs actually fell, which has surprised observers who expected a small rise. And that was driven by a very large fall in part-time work, greatly offsetting the good rise in full-time work. And their unemployment rate rose to 5.9%, which was unexpected. China has reported lower consumer inflation in January at 1.5%, as analysts had expected. Industrial inflation slipped to a 14-month low of 4.3%. And Chinese New Year will start at the end of this week. As in the past, this year will bring holiday migration of gigantic proportions. What will feature more prominently will be overseas travel, and more travellers will be going independently rather than in groups. The US Treasury 10-year yield moved around a lot over the weekend, but ended the week on Wall Street at 2.86%, up just 1 basis point from this time when we last checked. The volatility index, the VIX, ended at 29, although on Saturday it spiked as high as 41. The 2018 average until last week was just 11.5. And gold continues to be sidelined. This morning it is at $1,316, down $2 from Friday. Oil prices are down sharply again today from Friday, with the US benchmark now just over $59 a barrel, while the Brent benchmark is just on $62.50 a barrel. And this morning the Kiwi dollar opens at 72.3, and the cross rates are at 92.7 Aussie cents and 59.2 euro cents. That leaves the TWI just on 74 and plumb in the middle of its 2018 narrow range. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.